How's it going, crypto community? Jade, the XRP Martian, back with another XRP related video. In this one, we're going over a PDF sent to me thanks to XRP Legend. So shout out to you. Thank you so much for sharing this with me. He shared this with me a few days ago, actually. I just didn't get around to making a video until just now. So this is actually a really good PDF though. Again, from the World Economic Forum, and it's titled The Global Financial and Monetary System in 2030. So essentially this is a overview, a roadmap, if you will, of where the Global Future Council hopes to see our financial and monetary system in 2030, right? So it breaks down, first we get a list of everybody who is involved in this, and there's not anybody that came off the top that I felt feels like really worth pointing out. So I'll just scroll through it slowly for anybody out there watching on a computer that wants to go and look up some of these people if you want to do a little more extra research. I wasn't able to find anybody that I'm familiar with that's connected to Ripple directly. So by all means, if you are familiar with somebody, please point them out. I believe there was one person, actually, the governor of the Bank of Ireland, I believe, was a part of this. Maybe not. At any rate, we'll jump straight into the article here and get into the important bits that everybody in XRP's interested in. Now, I do want to cover a few points in this aside from the bit about Ripple, and I'm going to do that first because I know how you people work out there, because I work the same way. Really, I just want the thing that the video is titled about, but I got to build up some background for you, okay? So stick with me. I want you to understand why this change that we're going to discuss, this little bit in this that's related to Ripple, is actually such a big deal. Okay, so at current, the global financial and monetary system is at a crossroads. A decade after the onset of the global financial crisis, the world economy is showing signs of recovery. Growth in 2017 was broad-based, accelerating in about 75% of countries. Boosted by a recovery in investment, global trade growth has rebounded from its low point in 2001. The improved economic outlook in an era of low interest rates has boosted equity valuations, and growth prospects for 2018 and 2019 are also robust. However, significant challenges remain. Based on per capita numbers, growth is almost half of emergent economies, or growth in almost half of emergent economies has lagged behind advanced economies, and up to a quarter of developing countries have seen declines. In addition, the labor share of income continues to decline globally. As returns to capital increasingly contribute to global incomes, thus achieving inclusive growth remains a paramount objective. And so essentially, to put that all into layman's terms, I guess, while we are seeing the rich get richer, the poor are getting poorer. Incomes are on a broad scale declining, despite the markets overall going up. This means that we are on an unsustainable trajectory as far as global growth. This is something that almost everybody who's in cryptocurrency already knows, so I'm not making anything new, but I'm making it a point to share this because this is the IMF saying this, right? They are making it clear that despite this robust growth that we have seen over the last few years, it is not sustainable, and we need to work as a world community, as the article goes on, to agree to and implement the UN's Sustainable Development Goals, also known as SDGs, an acronym that they will use later in this article. And this is a part of their 2030 agenda for, as we're reading right here, it's for a sustainable future, essentially. Now, the rest of this, I'm gonna stop reading from this, and we're going to basically cover the key points of this. So they go over various methods that this new future, various ways the future could play out, and the first is where they discuss decentralization. Now, this is not decentralization in the sense of a decentralized money. Rather, it's pointing out that the world is moving away from the US dollar reserve standard to a decentralized standard where currencies such as the euro and the renminbi, I'm not sure whose currency renminbi is, but renminbi and the euro are likely currencies that will become utilized as global reserves as the US dollar loses prominence. So regardless of, to all Americans out there, which is most of my viewer base, whether or not digital assets succeed or not, the US dollar is not going to be the global reserve. So get ready, because the US economy will feel this. Americans, we will feel this. So we best be hoping that XRP wins, or digital assets in general win, because if not, those of us who aren't investing, you know, if our space doesn't do well, I hope that we're doing well. But I'm not a financial advisor, so again, anybody who's listening to this for the first time, please know that this is more so for entertainment. This is me going through sharing my finds on the internet, right? Granted, this is from a reliable source, the IMF. You know, it's a regulatory body for all financial industries in the world. For those who are not familiar with not the IMF, but the World Economic Forum, which most financial institutions rely on for reliable information in regards to global economy. So this is not politicized. This is as factual gets, because this is what financial institutions rely upon to make rational decisions in the world. So most of what I'm sharing is not my own opinions, but do know that if I am sharing an opinion, that it's my own and it's not for you to take as gospel, as I am a fallible person, as all of us are, right? So jumping back in here, it discusses how the US is losing its prominence as the global reserve, and also discusses how we are now moving away from a paper money society. So we've begun to move towards, most of us use our debit card or credit card nowadays, not cash. It's really rare to use cash unless you want to go buy some flour, or something illicit. It's really rare that we use cash, and let's be honest, the government knows why you're using cash, so use Bitcoin. Don't use Bitcoin. I'm kidding. That's easier to track than cash nowadays. They just don't want you to know that on the Bitcoin network, because that's a big selling point. But, that's an opinion here. I'm not a financial advisor. I just spent a few years researching blockchain and know the reality behind this network and what the fantasy is and what the reality is, based upon my own research. It could be false. At any rate, jumping in a little bit further here. So they talk about the challenges faced by the traditional banking models, and they talk about integration next, right? So integrating the global financial system into this digital ecosystem, and to quote the article directly, this integration is powered by shifting demographics and new technology. The post-global financial crisis stall has been replaced by a new golden age in global financial interconnectedness, which is promoting a more tight-knit network between countries, enterprises, and individuals in developed and emerging countries. So what is this interconnectivity that's going on? Well, it's the blockchain revolution, the fintech revolution, since there is more to the space than just blockchains nowadays. Blockchains, so 2017 essentially. There's now protocol layers on top of blockchains that are more important to the overall adoption of these networks than just the blockchain itself. So that's something important to keep in mind if you are new to this ecosystem, is to learn what is going on with the greater ecosystem of your network, not just, is it the most valuable? There is more to the space than just a dollar value on an asset. There are underlying technologies in this space that are making certain blockchains more successful in the adoption scheme than others. But digging in deeper here, the article further discusses challenges that are facing this system, such as decentralized systems that are a risk to disruption, right? So what decentralized system could they possibly be talking about? Well, just as previous waves of structural change and financial innovation have posed risk to financial stability. Sorry, I'm apparently hungry. Market order and investor protection, a more decentralized and integrated financial system will remain vulnerable to shocks. So, including cyber threats, market exuberance, and changing patterns of credit, liquidity, congestion, and operational risks. So, this is actually pointing out that the inherent risks in the decentralized systems due to their novelty, the fact that they're new, and the fact that they are still very illiquid, right? That's why it's pointing out that liquidity is one of the problems. They are illiquid. Even Bitcoin is largely an illiquid network when you compare it to global systems. Like, the total value of the entire digital network is less than $300 billion. That may sound like a lot of money to most people, but at the end of the day, gold, just one asset on the global stock market, is worth $7 trillion. So keep that in mind. An entire market worth less than $500 billion, one asset on the traditional market worth $7 trillion. So more than 14 times, almost 20. I think it's about 30, or it's at least 20 times the amount of money is in gold than is in the entirety of all these digital assets combined. And these are currencies. Many of these are units of account, much like the dollar, much like gold itself. So many of them should be comparable, at least in value, to gold when they reach maturity, should they be real technologies that have real world use cases, right? So at any rate, it goes on further to point out the need for forms of regulation, a need for a new forms of regulation in crisis management, and this is where they discuss essentially the weaknesses of the current system, the fiat-based system. Chapter 1 discusses regulation, and most importantly, the regulation of the future financial system, where they point out for many banks and other financial firms, innovation and digitization have become key strategic priorities. Again, for the development of a financial system that has the ability, the robustness and stability to stave off future crashes, right? This is the big takeaway, because they're preparing for a recession that is within the next year or two out. 2019 is a slowdown year. That means that we are reaching the end of a cycle, and it's a cycle that has been long overdue to play out because we are a decade into this bull run. That's crazy stuff. It's crazy stuff because it's now the longest bull market in the history of, well, the stock market. So all things that go up, as gravity says, must come down. That's just physics, and markets obey this law of gravity as well. So it is an inevitability. It will happen. It's not doomsaying. It's healthy, so long as the appropriate safety precautions are taken to ensure that the market finds a bottom that doesn't leave everybody without, right? That doesn't just cause the whole system to crumble. You can have crashes and people can come back. We came back from the 2001 crash. We came back from the 2008 crash. We came back from every crash that's ever happened prior to this one. We can still survive. And it doesn't mean that the system has to crash. It simply means that it needs to adapt. And that's what these financial institutions are doing. Again, we're building up to the big point of this article, right? I know this is a long video, but you need to understand that there are convergent forces in this world that are forcing this change to occur far sooner than most think that it would have otherwise happened. And to be completely frank, if there was not a financial crisis looming, then absolutely we could potentially have to have waited 10 plus years for what we are about to see occur within this digital asset space. And primarily, as my belief goes, in XRP. So Chapter 2 discusses digitization and the future of financial services in 2030, the impact of this financial revolution, right? So in this, they discuss the three forces of payment disbursement or payment disintermediation, which is the choice and competitive services with low oversight and screening, and the merging of finance and commerce. So it's the idea that it is removing middlemen within the traditional financial system. Another one is data aggregation and artificial intelligence. Data aggregation is just big data, right? Like Facebook collects everybody's data, and then they apply artificial intelligence to that big data to figure out how best to sell you something, right? Well, with this, they want to use this data aggregation and artificial intelligence to basically do the same thing and to help reduce internal costs for their systems. And then, of course, the last one being DLT, distributed ledger technology, aka cryptocurrencies. These are the three forces that are driving this new revolution in the financial industry. So let's be clear. The digital economy is these three things, and cryptocurrency is a critical part of that in regards to financial institutions. So anybody out there who is still a skeptic about what the digital economy is, well, you can now argue it with the people who created that definition, right? We're done playing that game. We now know digital economy is cryptocurrency. The level playing field is something within that digital economy. What is that? What is the thing within it? Well, it's cryptocurrency. So which cryptocurrency? Well, there's only one cryptocurrency at present that is actively working with these organizations, creating these definitions, these new terms, right? Who is it? Ripple. Do you want to know what? Now, it's not just me saying it, right? We're going to come down here. This isn't me saying it. This is the World Economic Forum saying Ripple, right? So let's just jump straight down to this because we're already up to 16 minutes and I want to keep this under 20. So, with all that build up, we're now talking about the fact that the Standard Chartered is bringing blockchain to life with ventures such as TradeSafe, and they're leveraging distributed ledger technology, DLT, to reduce the risk of duplicate invoicing and fraudulent activity. They've partnered with Ripple, a US fintech company that is pioneering global financial settlement solutions. Through a multi-bank initiative that offers straight-through processing, real-time settlement, low costs, elimination of reconciliation, that means failures, right, between multiple internal ledgers. Oh, I'm sorry, no. It's the elimination of the traditional correspondent banking system. This is why I get excited when I hear articles talking about that correspondent banking has peaked, because that is speaking directly to what Ripple is doing in bringing all these banks into a decentralized ecosystem. And this is allowing them to improve the liquidity and cash flow and reduce the cost of capital to offer better pricing to consumers by reducing the cost to institutions such as Standard Chartered. To go on, cryptocurrencies could be viewed as the pinnacle of DLT applications. They represent disintermediation of central bank currencies by offering new non-fiat asset classes and increasingly a means of corporate fundraising for initial coin offerings, albeit many are currently using Bitcoin, bypassing banks and the corporate finance teams. Non-fiat currencies are multiplying, fueled primarily by retail buyers and speculation. The world is mesmerized by the mesmerized by the incredible surge of cryptocurrencies and their value. The gold fever-like run of investors into the market being looked at as either a giant bubble or the next leap in the evolution of money itself. In any case, cryptocurrencies have become part of the new norm as companies are starting to accept cryptocurrencies. PayPal, Expedia, and Subway, and then NASDAQ in 2018. And governments are opening their payment systems to it. For example, the Swiss Multiplicity Chiasso in 2018, I'm not sure. Time will tell whether cryptocurrencies and fiat money will coexist or whether these two ecosystems will be consolidated eventually as central banks find blockchain compatible methods to make fiat currency payment at the speed required. The benefits of blockchain are clear. However, there are inherent and implementation challenges that need to be overcome. Not that should, not that they want, but that must. They need to be overcome. So, awesome read from, once again, the World Economic Forum. You can't get much more reliable, and here's where I go on my last little tangent before I round up. Ladies and gentlemen, there is no doubt in my mind that XRP is the financial institution's golden child. This is their golden egg. They view what Ripple is doing as otherworldly, as the most important thing that's probably happened to the financial system in nearly 70 years since Swift. And that is huge because they're recognizing, they're legitimizing the sovereignty of Ripple, which means that they are going to legitimize the sovereignty of Ripple's native asset XRP. Notice that Libra, Facebook, is sitting in front of the US Congress right now trying to defend the creation of their cryptocurrency they haven't even created yet. Meanwhile, another US-based company is working with hundreds of banks around the world that are worth collectively, nearly 100 times more than Facebook, and well, they're not being sat down in front of the court for the whole world to watch the Senate tear them apart. Why? They're working with people who are worth a lot more, who actually touch a lot more pockets than Facebook does. So why then is the US spanking Facebook, spanking Calibra for trying to create this cryptocurrency and ignoring what Ripple's doing? Or are they ignoring it? So that's my take on what's going on and my beliefs. But again, I am not a financial advisor. I am simply an investor within this ecosystem who is sharing my research with you, my viewer. If you enjoy my research and find me entertaining, as apparently a lot of people do, please be sure to hit that like, ring that bell, and hit that sub if you're new, so that you can stay up to date with all my newest cryptocurrency videos and follow me on this journey. I hope that you will do your own research to decide whether this is the right space for you to invest in. I personally feel so, but again, I am not a financial advisor. You must do your own research, please. To all those who are on this journey out there with me, searching for that XRP moon, when you come, moon, are you there? When it comes, I can't wait to be there with all of you in the XRP ecosystem. Many of us have waited for years for this to play out as we've researched the fundamentals developing in this space, and it is my belief that should we just express the patience necessary until all of these regulations come through and everything is hammered out, we will be rewarded for our patience. But again, not a financial advisor, right? I can't say that enough. So please stay patient, everybody out there who's been holding for all this time. I know that when the price comes down, it's hard, but we're watching a pretty green day today. And it is just the day after the Mars, or the Apollo 11 launched, so maybe this is just our first day of liftoff headed towards that moon. Who knows? Who really knows? Not me. So, with all that said, I can't wait to see all of you in my next video on Mars. Later, everybody.